Forward with Santosh Singh joining us now. Santosh, afternoon. Apologies to keep you waiting, but Santosh, you come on a very interesting day. Canara Bank numbers just came out, Axis is lined up, ICICI over the weekend. Let's start with the quality of earnings financials are posting right now. What are your thoughts there?
So see, if you look at a general theme is that see the growth we all know what is the growth. Actually, the systemic growth is increasing, so that's why you can see even the banks giving you slightly higher growth on the advances side. But the other part of the equation is everyone is suffering from some of the NPM losses on the treasury book, which is a theme across the board. Because barring I think ICICI Bank where it has been much lower, it has been the one thing which has happened with most of the banks. And that was expected in this particular quarter. But what is also visible is that the crux of it is that the credit quality of the entire banking system is not deteriorating. It's still very, very strong. And given that we are coming off from a very bad cycle, it can remain strong for some time. So I think that is one thing which is which is quite soothing as such. I think the key thing to look out for in next 1 or 2 quarters will be what happens to the net interest margins, because that's where the expectation of pressure is for some in the near term. I think that's the only variable which we need to check out for, but otherwise it's all going fine.
What pocket of financials would you buy right now in this kind of a market?
So actually, I'm much more bullish on the non-bank side of the business. Actually. That's visible in my portfolios also, which I manage. That it's some non-bank financial heavy. So one of the companies I hold is called SBI Card, I'm much more bullish on the on that side. It's not to say that I'm not bullish on banks, but I think the other side has been beaten up much more sharply, barring 1 or 2 stock on the non-bank, even on the non-lending financial side. They have been beaten down much more sharply than what has happened to the banking system. And see the credit quality, sort of better credit qualities across the board. It's not only for the banks; it's happening for everyone. It's because the system has almost come through a sort of cleaning up phase. So I'm looking more towards the other side of it.
Insurance, AMCs, all of that. A big listed AMC just lost a legendary CIO.
I didn't get your question, Ajay. I think the breakdown.
That non-lending financials are insurance, some of the AMCs, and there is some activity in one of the largest listed AMCs. The legendary CIO wants to start his own shop now.
Yeah, so to be frank, when I'm looking at non-bank, non-lending, I'm looking more towards insurances rather than the AMCs. Because because that's an area which has not done really well for last 1 year, and they have seen some real good numbers coming in. And I think the most even amongst them, my sort of biggest bet is on the health insurers side, because I think they have suffered very badly. So had their valuations during the entire COVID phase. And they are going to be one of the bigger beneficiaries of COVID, as well as the structural story which is going to play out in this particular space.
Santosh, on the degree of, bearish or overtly bullish, where do you stand right now? Have you, the degree has actually improved tilted more towards bullishness now?
Yes, when over last 2-3 months, my view is I'm much more bullish on the markets than what I was say 2-3 months back. And clearly, one of the reasons is that I think the inflation is almost peaking out, and if that is the case, then the sort of interest rate hike we all are expecting, it might not be steeper than that. So that negativity is all sort of, in my view, negativity unless and until we see something going very wrong again, because that's what happening for last 2 years. But unless and until we see that happening, I think the negative news is all priced in.
Okay, so what are the triggers? One is inflation peaking out. Other have valuation moderated to your comfort zone. Also, quality of earnings from here on.
So see, definitely the inflation is one variable which we are all watching for, because that has been one of the main problems with on the margin front if you look at across the board. So that's one thing which we are clearly watching for. But what I could see is that the deviation between the small cap and the large cap has been very, very sharp. The small cap has been beaten down like there's no tomorrow. So large cap still has sort of has survived and not beaten down that much, but small caps have beaten down. So I think one of my views is that this is the time to sort of add a little bit more to the cap side of the business.
What kind of names, not exactly name, but themes have you added in mid cap, small cap, be it small manufacturing companies or chemicals or textiles or auto anch?
The small caps are all bottom up, so it's all about looking at the companies and then finding a good company. So it's not means I'm not looking at thematic on the small cap side. It's all bottom up, and that's where I think it's offering certain opportunities which I'm trying to add on in the portfolios.
Name, but give us flavors. What all have you added?
So one of the names we have been sort of, and results came out yesterday itself. It was eMudra, so it is I think one of better run companies. It's in sort of the main business used to be security sort of authorization, and now they are providing much more to the global companies in that particular space. So that has been one of the additions. Then I think another one it's a sort of you can say quite controversial, Religare Enterprises. That has been one of my additions in the portfolio because I think they are one of the best health insurers. And as I said, I'm quite bullish on health insurance space. So that's another
Correct,
one
you're
which is
right.
added.
This is part of the listed company, so which is a big play after Star Health. So that is a value unlocking potential. But Star Health is the only listed one, right? And
Yeah,
Care,
yes.
and you're playing Care via Religare. What kind of growth do you see in health insurance right now for next 5-7 years, and also profitability metrics?
See, a couple of years, it's going to be more than 20%, 25% even for a couple, 2-3 years at least. 5-7 years, I think it will be around 20% for 5-7 years. And I don't find a lot of spaces where you can say with a lot of comfort that I see a 20% growth rate. And the return on equity in this particular space for the top players are going to be somewhere between 18 or 22%. That's my view and will stay there for 5-7 years. Maybe for next 2 years it might be higher than that as well because they are coming from a very bad phase and suddenly there's going to be a tailwind from next year of the higher interest rates. So that's also going to help out.
Interesting. Okay, what else? Are you liking in this market? Have you looked at some contra calls? Do you think IT has corrected enough? Do you think metals have corrected enough to have a look there or no?
IT definitely, I think that has corrected. See so one of the things I was worried about for last two results season was the margin compression in IT, and I think that bad news has come through, and I think it has connected quite a lot now. The valuations are coming back where in the comfortable range, and the growth rates might remain high for some time. So that is one space. Definitely, this is and we are trying to sort of look at how to add some more to that particular side of the business.
All right. All right, Santosh, thanks very much for your time. We'll chat up offline. That was Santosh Singh.